running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. I am solo today as our man BigBeat is enjoying a nice little trip to nice little cruise here. So it's going to be me for a little bit here, although I do have Mr. Flanagan, Mr. Currency himself, Stephen Flanagan, coming in a little early today around 9:45 to bring you everything across the forex markets. Most of the news here, it's all about stocks declining as Moody's downgrades U.S. credit ratings. That came across towards the end of Friday. First thing that I want to point out about this isn't the first time this has happened. People are sort of acting as if the world is ending here. We've seen downgrades before. A few different times. Does it matter? Yeah, a little bit. It could especially hurt bonds, which already are feeling the effect of it. We've seen bonds in U.S. Treasury rise overnight. 10-year note reached 5.54, up about 11 basis points. 2-year at 4%, up about 2.1. We do see so far SPY set to open down about 1 percentage point here, currently trading at 588.50 or so. And the NASDAQ or the Qs trading at 514.20, getting hit a little bit harder here, down about 1.4% so far. As I said here, it's definitely, weighing on everything this morning. We do know that the economy contracted by about 0.3% annually in the March 2025 quarter, first decline since 2022. I think some of the bigger news that you got to keep a mind on or watching is, quite honestly, what was said by our Secretary Treasury over the weekend. He definitely, in my opinion, took me back a step here. And he was speaking on the CNN State of the Union. And the takeaways there are interesting because he really, where I got a less of that woman fuzzy feeling right now, was that he emphasized that the tariff strategy is designed to compel trading partners to negotiate in good faith. His comment was that President Trump has put them on notice. If you do not negotiate in good faith, you will ratchet back up to your April 2nd levels. So where, everything looks like it, or we've seen things that seem to be moving in the right direction in the rhetoric, which is what worries me usually more out of our White House is, what are they tweeting? What are they saying on TV? And my takeaway here was that, the rhetoric underscores the fact that, the administration is going to use tariffs as a coercive tactic to extract favorable trade deals. But so far, we haven't seen those trade deals necessarily, come to light. Now, we've seen supposedly trillions of dollars of investment coming this way, especially out of that great news out of the Saudis last week and out of the Middle East. But we haven't seen this play out, which is why we're seeing the jittiness of the market today, and why we're slated to open up down a little bit. I will say tick not terribly to the downside, so there's not a huge amount of volatility. And in fact, we have been, if you look at the hourly here on the Qs, we've come off the lows of the day, and we have been climbing up slightly here over the last couple of hours. So we have regained footing both on the SPY and the Qs to that way. So, do we see a melt up now the rest of the day is the question, or when the cash market opens, do we see more blood in the street, so to speak. So that's going to be what we're watching here at 9:30. Do have to mention, you guys know I'm a big watcher of VIX, the volatility index, and it did jump up right through the support and resistance level that we formerly had. That was resistance here throughout Friday, jumped right back up to this 1937. I'll be watching closely anything above 2040 here, and we more likely fill the gap back up to 2122 area. So VIX, if it gets jittery today, could give you a directionality to the market. Moving back again to the tariffs and what sort of came out. Secretary Treasury talked about 18 key partners that they're looking to settle deals with. Sounds great. Didn't give any names. We would expect and hope that they are China, Japan, the EU, Canada, and Mexico, given their volumes. The other thing that came out of it that I thought was a little bit interesting too is that they talked about a new regional approach. Where they said that, you can't deal. Investment noted the impracticality of negotiating individual deals with 150 countries, as the president had initially claimed. And the president has now backtracked on that a little bit, saying that it's not possible to meet the number of people that we want to see us. And it talked about some, we could see some unilateral deals for Central America, maybe South America. Parts of Africa were mentioned, and parts of those were the main ones. So I am more concerned, I think personally, about that than Moody's downgrade. To me, Moody's downgrade does not mean much. I don't think it's. We got to also hit the 500-pound elephant in the room. People asking or talking about that it's a political move. I don't think that it is. They're usually a pretty apolitical organization, Moody's, and if anything, usually lean towards the right. So that wouldn't make too much sense. They're all pointing at one person, one analyst. So I don't read much into that personally. The other part that really has me not so happy again over the weekend too is Walmart and the sort of reaction, reply, rhetoric out of the White House in regards to Walmart. And it wasn't just from the president. Again, the Secretary of Treasury talked about concerns about tariff costs being passed to consumers, specifically mentioned Walmart in it. And his comment was Walmart is, in fact, going to eat some of the tariffs. I didn't apply pressure. And that has me concerned, because as soon as somebody says I did not or I am not something, they usually are, or they usually did. And then he later clarified to Tapper, the person from CNBC, that he spoke with Walmart CEO Doug McMillon on Saturday, suggesting some tariffs might be absorbed by retailers, though some costs could still reach the consumer. And President Trump came right out and tweeted on Truth Social, whatever, Social Truth, whatever the name of that thing is. Walmart, eat the tariffs. That's not how this works. They're for-profit companies. This is not a non-profit world that he's talking about. And I don't believe that any of the Trump industries out there would eat the tariffs themselves. So didn't make much sense. And it's interesting, though, because sort of like where Amazon was going to put the amount that any price changes on their site was seeing that was related to tariffs and had to backtrack that after a call from the White House. We see this again. To me, this is not great, because eventually these businesses and CEOs don't like to be told what to do. And you see something more that comes from that. So I'm hoping we don't. But yeah, it's not his job. It's not their job to say to a company, eat tariffs. It's your job to figure out how to fix the economy on your own and get tariffs to where they're at a place, or get the economy / tariffs to a place where everybody is better off now than we were before. He did downplay the Moody's downgrade. Like I said, I don't really care about it. I did think it was funny that he actually brought up Larry Summers and said, Well, he doesn't always see eye to eye with Larry Summers, again, former Treasury head. That when he said it the first time that we were downgraded from Moody's, that's the sort of the way to look at it. And I do. I don't think that matters all that much. I think tariffs matter much, much more. It will cost more money. What does it do? If the bond buyers, bond traders are, concerned about it, then we'll see that happen. And as I said earlier, the first reaction that we've seen from things that we can watch on 24-hour markets is currency. And we'll talk more about currency with Mr. Flanagan in a little bit. So I don't want to take, away what we'll talk about there, but we saw the Dixie drop down. So, he was hoping, and we don't invest with hope, but he was, I guess there's no other way to say it, hoping that, this weekend we would see good news and that we would break an important resistance that we had on the Dixie and start to see that reemerge. But we did not see that over the weekend. And as I mentioned, when we start to look at rates, the 10-year sort of shows you, in my opinion, everything that kind of matters here right now. And they've jumped up from even, the highs or the lows that we saw last week on Friday, down around 4.4, as we had seen hopes that these tariffs and everything was moving in the right direction. But boom, we've seen pretty much a relentless move to the upside. The bond markets, why does this matter? It means it's much more expensive for the U.S. to raise the money needed, the debt. Treasuries are the way that we finance everything going on. And that's going to be a problem. So, we'll keep an eye on it, but it definitely is going to matter. So, that's the takeaway. We gotta watch these rates and see what happens. I will also point out that we've seen a little bit of the same thing that, again, that the folks that thought we were coming out of this with more of a V shape than a U shape. I'll point out too that those people were very quick to call that the market knew what was going on with the drop of gold. Well, gold is up over a percentage point here in the last 24 hours. You can see upswinging here even this morning more. So we'll see what we get here. Bitcoin did have a nice move up to 107. Their bulls attempted to take it all the way to, back to the all-time high. Did not work. We saw two huge levels of liquidations of longs. And I do need to point out that my bigger takeaway on why Bitcoin's under a little bit of pressure here, and I'm still not saying it's out of the woods for sure, is the fact that Bitcoin, the liquidations, the shorts that got liquidated on the way up was about $203 million. So not a small amount, $250 million or so. But on the way down, almost $500 million were liquidated there. So the bulls actually got hit harder on that pump up to 107 and pulled back than the bears to almost a 2.5 to 1 ratio. So that is important to keep in mind when it comes to Bitcoin right now. And again, when we look at the heat maps here on Quasar markets, most of the crypto markets in the red, most of the pre-market trading on the S&P 500 outside of healthcare, which is really being led as from a bounce back in UNH that's nicely rebounded here. That's what has that moving up. Again, when we look at it, tick down about 150 right now, advanced decline down about 2130. So that's a pretty bigger spread than we've had most of the week to the downside of most of the last 10 days. So we'll see. It could get, this could get exasperated on the open. I do think there are some things personally that I would be looking at here on laggards that might give me an opportunity. Some of those AI names, Tempest AI, again, Rigetti, that you guys know I had a really nice trade on last week. Some of these are getting hit pretty hard, or were in the pre-market here, down 6.56%. So if we start to see a bounce back, Robinhood, another name I like that's down here significantly today, Palantir, Tesla, SMCI. You've got a bunch of them that are, looking to open pretty far to the downside compared to where they are. So those of you that think you missed, if you do think there's a V-shaped recovery or a quicker recovery coming, this would be a buy the dip opportunity for it. I am a little bit more cautious, want to see what's coming. That doesn't mean I won't play things to the upside by any means. I actually will be looking at some things here that I think get overextended to the downside, because I think you're more apt to see things overextend to the downside than the upside. As I mentioned, the big thing on the upside so far, UNH, nice climb here back above 300. I do know some people that had bought some $300 YOLOs when it hit down on the downside here the other day that are very happy today. I am not one of them. I did not get in on that, even though I said I wanted to. I just never did on the UNH. Quite honestly, the options were extremely expensive to me, seemed a little bit out of whack. So I stayed out of it. But those that got in, congratulations today. You're waking up a big winner. I would mention take profits, take profits, take profits. Don't have to sell it all, but never be afraid to take some profits there. Other things moving to the upside today are Ryanair Holdings and airlines in general were moving up a little bit on upgrades that I saw. I think it was UBS that had upgrades on Delta and United today. So we've seen some moves to the upside there. Healthcare is also getting a little bit of wings. You see Humana up 2.18. There were a few others just below this in the healthcare sector that are doing it. Defensive names are back in vogue today. We see the mining names, Newmont Corporation, SSRM, another mining company. A couple of those are some of the bigger moves to the upside today. Not a lot to the upside, though. This was all I really found that was up 1% or more in the S&P and in there. Things I'm going to be keeping an eye on this week's going to be retail earnings. I do have more notes on these. Give me 1 second here. It's always tough when I'm solo to get everything right in front of me. Okay, so Tuesday we're going to see Home Depot. They're looking for revenue around $36.8 billion, which would be slightly down from a year ago. Reflecting cautious consumer spending amid tariff concerns and high interest rates. I do think that the commentary on tariff impacts as Home Depot sources significant inventory from China and consumer sentiment slid to a second level in May will give us a good, insight here. I'll definitely be looking at it. I think the company's guidance also will be scrutinized for insights into housing demand and inflation passed through to consumers. So again, a big one to keep an eye on tomorrow will be Home Depot. We got Target, my daughter's favorite store, and my wife's, I think. I know it's my daughter's favorite store. Not sure about the wife. They're on track for Wednesday here. And we do see that they are expected to see about $24.5 billion in revenue, which would be up marginally from last year. EPS, again, looking to be slightly up. Again, there are people talking about margin improvement from the supply chain efficiencies they put in place. And what is the key thing that everyone's going to be watching for is going to be their tariff-related cost commentary. They rely on imported goods. And we know that Walmart's recent price hike warning set a cautious tone across the markets. So we'll be keeping an eye there. Also on Wednesday, TJX is on track. This is more on the apparel side, of course. They're looking for revenue of about $12.5 billion, which would be up, almost $1 billion from last year. They're looking at that driven by off-price retail strength as consumers have traded down and resilient demand from the consumers when it comes to value brands. Looking for, again, a nice little increase from 87 cents EPS to 76 from 76 last year to 87 this year, with analysts expecting strong same store sales growth. Guidance, again, will be the key as their global supply chain is exposed to the tariff fluctuations, though its off-price model might mitigate some of those prices. So we want to see what they have to say. Tuesday, we also have Lowe's. Again, Lowe's matters a lot as it will give us a barometer, not just of the consumer, but of the housing markets and construction markets and things like that. They're looking at, again, similar to Home Depot, looking to be slightly down from last year, both on their revenue and on their EPS due to softer do-it-yourself and housing market demand. And again, everything's about what are they going to say in regards to forward guidance, forward guidance, forward guidance. Other ones to keep an eye on this week, BJ's will be coming up. Had a nice little rebirth here. BJ is actually the stock that's looked really good lately on a retracement here to the bottom of the linear regression around 113. Could be an interesting one to try to get into here as it leads into it if you think that they're going to post good earnings. They're looking to have a growth on both their earnings, revenue, and EPS versus a year ago. People will be looking at what their, or at least I'll be looking to see how their e-commerce is growing more than the same stores. I mean, I think Costco, BJ's, Walmart all do so well when it comes to, brick and mortar. My question is, who's taking the lead when it comes to online? Is anybody catching up to the Amazon there? Is anyone making a big move? BJ's has seen some gain traction as consumers seek value amid inflation fears. So that's what we're going to be keeping on. Also want to see how the company's focus on private label brands could help mitigate their tariff impact and also their profitability. So those that don't know, BJ started doing their own private label stuff, following what Costco does so well with Kirkland's, and we'll see if that's moving anything in the right direction there. Bunch of others this week. You also have Ralph Lauren and others on that side. So we'll see what we get out of those. Reporting today, ones I'm going to be keeping an eye on: Palo Alto, PANW. Palo Alto Networks, which is right now set to open up slightly down here, trading at about 190 all-time high there, 208. They, for those that don't know, very big in cloud security, so we want to see what they get there. Most of the tech names have had great revenue beats and EPS, so it almost worries you if they don't. What happens more so than if they do. So that's my concern here as we start to get a little bit of fatigue when it comes to that stuff, because they're looking to be up about, from 1.95 billion to 2.15 billion on the strong demand for cybersecurity solutions. And they're looking for their EPS to grow from 132 to 141. And like I said, investors expect upbeat guidance as the cybersecurity remains a priority despite economic uncertainty. Tariff-related supply chain costs could be concerned. You might say to yourself, in tech, how can that really be? A lot of it is on their software sales there, but also, I just lost my train of thought there, is some of that sometimes is on currency valuations that can be a problem there too. We'll mention Palo Alto. If we look at their financials a little bit here, they are one of the companies that has a sky high PE of 108.98. I mean, that's crazy to me personally. That's why I have trouble, going after Palantir and Palo Alto unless they have a big pullback, because, they just work on such a high price to earnings ratio. I mean, 108.98. Another one that's on deck Wednesday will be Snowflake. Snowflake trading right now at about $180. Their all-time high is about 194, so down a little bit from there, down about 1.52% today. Again, another one that's expected to have a real nice revenue growth from 708 million up to 815 million this year. Again, talk of AI. That's one of the reasons that I'm also kind of thinking about getting into some of the AI names that are down tremendously today. Really could be about the fact that, I do think Palo Alto, Snowflake, some of these tech names are going to bring up AI. It could give us some runoff effects here on some of those. So I'm going to be looking today for a bounce back by some of these names. Again, like I said, Tempest AI. I'll be looking for ones making sure they don't have any earnings in front of us. I'll take the ones that have the earnings in the rearview mirror. And Tempest AI, Sound AI or SoundHound AI, another one that I'll look at maybe. Same thing. Some of the speculative names out there like Lunar, ATST are getting hit here today. As I mentioned, Robinhood, another name I'm looking at here this morning. We are about 3 minutes from the open here so far. Tick still negative at about 141. Advanced decline sliding a little bit further to the downside. SPY has dipped here over the last 30 minutes or so. Same thing. It looks like the Qs are sliding a little bit still. Back down. So we'll keep an eye on those. Gold seen a little bit of a sell-off. VIX back at 1950 basically. So not at highs of the morning, but close to them. So those are definitely things to keep an eye on. We'll mention WTI back down at 61.75, had blown up almost to 62, 63 last week actually, before the seeing a little bit of a sell-off here. I have noticed locally gas starting to pull back a little bit. And as we look at key names here, like I said, almost everything in the red so far. Not a ton of green to look at. Constellation Brands, which we know Warren Buffett made them big move into, up about 57 basis points here this morning. So that has climbed up still and looking to open maybe in the green here. UNH I mentioned up about 4.2% here. Was about 305, but now back around 303. Watch for a quick sell-off here on the open on that. We're about 1 minute from the open. So getting ready here to see what we get on that. Do want to change my heat map here. Change over the day. Okay, we are getting ready here. I see Kramer already yelling on TV. Let me turn him down a little bit here. See what we get here as we're ready for open. Getting pretty neutral here coming into the open, so it's less than 100 to the downside. So we're getting closer to neutral as we go, and we are open here. Let's see first moves. Let's watch United Health here. I think this is a good one to keep an eye on right off the bat. Now only up about, well, there you go, up about 4.12%. Had been up as high as 6% here in the pre-market, and had hit highs of about 306 earlier this morning. First thing the algos are doing, dropping it back down. Let's see if it bounces at that 300 level. That to me is going to be the key round number to keep an eye on. Tick is negative about 428 here. Advanced decline down about 4,800. With that being said, Q's actually moving back to the upside a little bit here on the open. Was down earlier, making a little bit of a recovery here, only down 1.17%. SPY down about 89 basis points here, but again, first wick nicely here on the minute chart to the upside. Dow Jones opened it down about 62 basis points and actually sliding a little bit here. So we are seeing a slide across the Dow Industries so far. RUT opened up down 1.47. That's not surprising for those that don't know. The RUT is the Russell's small cap 2000. So these are the smaller businesses. As we know, they would be the ones that definitely get affected more by the Moody's downgrade than the others. And that's a pretty big gap down to the downside here, almost 1.5% down. Dow Jones continuing to slide, now down 70 basis points. SPY is down about 92 here. Tried to make a move to the upside. It's getting sold off. Qs, if we looked at it, opened up right around that 515 level. So that's the area to watch here. 515 was right about the spot that it opened on the open. In fact, 514.50 or so. And then it jumped up from there. So that's what I'm sort of watching for. Do we get support here or not? I think you got a little bit of resistance right around that 518 area to watch for on an upside move. Support-wise, you don't have a ton of support right now below it. It is using the linear regression on the hourly here pretty nicely so far for support. But I don't see real true price action support right around here right now. But we'll see what the algos do here. We're staying still negative here on the tick 215. See, tick has been mostly to the downside since the open. Dixie back down at 127. It has moved up since the cash open slightly. Q's not really much movement. 515.44 here, so we're not seeing a ton of movement yet. Not a ton of movement. On the Mag 7, NVIDIA back at 133.06, so slightly down about 1.75% here. Apple, the one getting hit the most on the Mag 7, down about 2.4. Again, tariffs seems to be the general view that tariffs affect them more than anybody. Amazon being the next one, obviously down 1.64. Tesla getting hit real hard here, down about 4.4% here. Not sure I saw any real news there. There's a new board member. Nothing I really see there that should have it necessarily moving to that downside. Bitcoin is trying. So since the cash open, Bitcoin's bouncing up a little bit here from that level. So far support at that 102.5 area did hold. That's the key spot here. I do think anything below 102.250 or so would set off a cascade of liquidations to the downside. On the upside here, though, you got a little bit of breathing room, but anything that broaches above that 103.200 area, 103.250, could see you get liquidations to the upside. Like I said, there's a large amount of open interest. See here, open interest right now is about $142 billion on the Bitcoin market. So $142 billion in futures open interest right now. So just something to keep an eye on. Take a look at the short long ratio. Yeah, currently it looks like more people are still going long here, so it's something to keep an eye on. 24 hours, the long volume one has moved up 180. Well, it's pretty neutral. Short volume 191%, 80 billion. So we're pretty neutral here. So that's interesting. We are actually pretty neutral when it comes to our long and short. We look at the heat map here. As I said, crypto mostly in the wrong side of that. Tick has gone positive here, so we are seeing some buying kick in now. Q's moving to the upside. Trying to break 516 here, so that could be positive. We could see, like I said, we've got a little bit of room to about 518.65 is the area that I'm sort of targeting here on the upside. That's the key spot. We break that, we head back to that 522 area, in my opinion. See a nice little move there. Dow Jones picking back up. Let's see what's going on with our pumpers here. So far, a big winner, Moderna up about 7.88%. A lot of these smaller groups, like I said, United Health up 3.53, but that's down from where it was earlier. So that's moving back. Humana up about 2.54 here. A lot of them are healthcare right now. Gilead, PTC Therapeutics, Regenicell, Alanine Pharmaceuticals. A lot of the names that we're seeing that are moving up are in the healthcare sector so far this morning. Trying to see if I see any other real sectors kind of catching anything. Vodafone up about 1.43% here this morning. Dollar General up about 1.29% again. So that's a trade down play right there. These are all healthcares in general. Take Two Interactive up about 1.07% here. A little bit of a nice move to the upside. I mentioned before the open that some of the miners were moving up. Newmont here up about, oops, they just moved. They were right up about, oh, there it is, up about almost a percentage point here. They were up a little bit more earlier. Again, defensive names, Kimberly-Clark Corporation, you know, they're moving up. So, and then when we get to the bigger laggards, as I said, the AI names SoundHound AI, Tempest AI, AST Space Mobile, Intuitive Machines, LUNR, getting hit pretty hard, Rigetti, Aurora. So a lot of the speculative names getting hit the hardest today tends to be the ones that sell off the quickest, mostly retail in there, and very speculative names. Also seeing Chinese names getting hit here today, like Billy Bibby. Saw a couple others earlier that were down. I think I filtered them out of here. Also, Bitcoin mining companies getting hit pretty hard here. Mara holding down about 3.82%. Also seeing solar names get hit pretty hard here today. Sunrun down 11.56%. First Solar down about 5% here this morning. Or a couple others I saw in here. Enphase down about 3.89. So again, we're seeing that sector, chip sector, getting hit pretty hard here too. And tech also, Palantir and those down. So let's take a look at these Spider Selects. Is any of them? We do see XLV, which is healthcare, is the only sector that is positive so far. And energy getting hit the hardest, down 1.72%, followed by XLY, which is consumer discretionary. We'll mention also that most of the overseas markets closed to the downside also. So these trade tariff talks and everything, not just taking down the U.S. market, but also the others. Crypto, Bitcoin holding up nicely at that 103K level here or right below it. So it's holding up pretty nicely. Gold trying to get back to 3250 or so, but not quite there yet. Qs just broke above 517. So we do see, like I said, maybe a little bit of a melt up here by the Qs today. Could be an interesting, or could have been a good, interesting buy the dip opportunity there on some of these. Look here, if anything else hits me. Not really. Nice move up though by the Qs for sure. SPY now. We see moving up. Tick's gone positive 163, 192. Advanced decline has been climbing up since the open. You can see it opened down about 47, almost 4,800. Now at 43. So, still good, still hitting downside. VIX though has tumbled down to 1891. So that's what I want to see. Let's get this VIX back down towards that 17 and a half level, and we can definitely melt up nicely here. All the markets do. The market seems to broadly want to try to move back up to the upside. Seeing some more hit the green now. Abercrombie and Fitch just went green. AutoZone just went green. Carvana, Delta Airlines. I mentioned we saw some upgrades across the airlines today, so they're getting some love. Dollar Tree and Dollar General in the green here this morning. Microsoft now up a half a percentage point. MicroStrategy up 1%. That's a little surprising. Michael Saylor did tweet out about a buy again this weekend, so that might have hit the actual buy, might have hit the news here this morning. UNH continuing to climb here, back above 305 here. So a nice, real nice recovery here by UNH. Visa just broke into the green also. So we do see some things there. Looking at the chips, though, they're all still basically in the negative. Banks are a mixed bag. We see Morgan Stanley down about a full percentage point. Goldman Sachs down 71 basis points. JP Morgan, Bank of America, and Wells Fargo down about 30 basis points there. Do see some foreign banks here that are moving up. Charles Schwab moving up here, just went to green. There. Mag 7, NVIDIA trying to get back up towards 135 here. So it's made a nice move up since the cash opened. So people buying the dip on the mag. Even Apple, which dropped way down going into the pre-market too. People seem to be happy buying that dip. Microsoft continuing to move to the upside here, up almost 60 basis points here this morning. Yeah, so far since the cash open, everything looking pretty good here for a melt up. The question is, is this a brief algo-led charge? But look at Amazon here. I mean, that thing climbed up from 201, 204 here. So people don't seem to be scared this morning. They're buying to the upside. Question is, will it continue? But so far, so good. All the Mag 7 leading the resurgence here for sure. Tick staying positive, 263. Advanced decline, 43.52. Q's only down 84 basis points now. SPY 65 basis points. Dow Jones down 40 basis points. Basically, all of them, moving to the upside since the cash open hit, basically. So it's seeing the buy the dip mentality so far. Definitely seeing the buy the dip mentality kick in so far. Icon Industries getting hit pretty hard here, down about 7.9%. This is Carl Icon's name, company here. I don't see any real news here on it. I don't know what's doing it. Because they had earnings back a couple weeks ago. Definitely a big dump across Icon Industries. See if there's any news here. Not really anything here to see. Okay. Try to see if there's any data. I don't really see it. Okay, Mr. Flanagan has come in early to help me out here without BigBeat. We needed an expert in the field, not me. So here he is, Mr. Flanagan.
Good morning, Howard.
Steve?
Happy Monday. Yeah. Boy, it's always heartbreaking when markets trade, in such a lethargic manner. And what I mean is responding to the Moody's downgrade.
Yeah, that, like I said, you've been doing this for a long time, and it's like, it's almost nothing, right? I mean, this has happened, and it's not like it hasn't happened before.
They're only joining what's already happened with Fitch and S&P. And, as far as rating agencies go, I would only say very simple. Anybody see The Big Short? Okay.
Absolutely. I love it. That's what you're going to say. Yeah. It's true.
Yeah.
Yeah. They lied for how long there? I mean, that's one of the best lines in there. I'm driving over there right now.
So, I mean, I don't pay it much attention. However, does it, I'm not going to totally belittle it, but, investment managers do have to check a box. And, certainly when things get downgraded to certain degrees, it does influence flows in the marketplace because a reweighting has to exist. So, but I, don't want to pay much attention to that. There were a couple of things out over the weekend that, I want to just make sure. I always, kind of dig deep. I want to look for the news between the lines, and one was, if anybody saw, the EU Trade Commissioner, Mr. Moros, came out and in an interview with the FT over the weekend said that the continent intends to buy U.S. natural gas, weapons, military, and agricultural products. So I thought that the fact that the United States isn't talking about the EU and the Eurozone and focusing on China, that could be a real subtle positive underneath, especially
Absolutely. Yeah.
with their top guy coming out and saying, hey, we're going to do this. And those are basically hitting on three major parts of these,
Sure.
these.
Yeah, no, that would be huge. I didn't see that. The problem, as we know with the EU, is so many talking heads and not enough movement usually. But that, yeah, I mean, but are they playing both sides of the fence? Because we've also heard them on the negotiation with China, and everyone's got to be safe. My bigger takeaway was your boy Bessent, on State of the Union was, in my opinion, went back to sounds like we're not there yet. It definitely seemed where I saw all the positivity out of that a week ago, we went back a step, in my opinion, because and my reasoning for that is it didn't sound like him speaking. It sounded like the president speaking.
I think, what he stated was the obvious, and that is, listen, 90 days, you got to get to the table and negotiate here. I think the U.S. has about 12 or 18 major players that they want to negotiate with.
Yeah, he used 18 as his line.
Okay, so, clearly people are dragging their feet, and I think that's kind of the veiled threat, a blanket out there that says, hey, either you get to the table and start moving, or we're going right back. This is not
right. So, I mean, to me, I think that's what was spooking investors more, because I think a lot of investors thought that, we had, gone past those days, so to speak.
Yeah, I never thought we went past those. And I
know you didn't. You've been very adamant about your time frame, which is still in track there, but,
And I think, we've talked about this Wednesday and Friday of last week, that you're not just going to suddenly change market behavior. Traders have done very well in the last 45 days. Everybody got caught off guard, perhaps on the April 2nd announcement, but people quickly got in, and the negatives were very rewarding to those who can trade and short and trade in that manner. And now, of course, you've had this recovery last week in particular, but the moment you put the tariff word back in, bam, everybody comes in and hits that market again, because it is a very rewarding trade if you can trade in that manner. So it doesn't surprise me that over the weekend that news spooked the markets. The second positive out there is the tax cut bill. Suddenly, wow, when did that got voted on over the weekend? So, I mean, clearly these guys are working hard at it. Now, so we'll see what the tax bill gets out of committee and goes to the general vote before it would progress on to the Senate. But that was another positive out there. So what we need this week is we need another tariff agreement. That's what we need, is a sprinkling of another positive to the market. This is a two-sided market right now.
Yep.
If you suddenly get an agreement here with an EU or an India, this market's going to respond rapidly to the upside. Likewise, more tariff tough talk or going after a specific country or China news suddenly comes out that's not good, you're going to see a quick move. So it's a two-sided risk right now, and you've got to be very disciplined in your risk management style here.
Yeah, I couldn't agree more. That's you just nailed it there. We're back at tweet analysis over technical analysis, unfortunately, because there is explosiveness to either side right now that it could come out more so than we really had a week ago, unfortunately. So we'll see there. And we didn't see much movement in Ukraine and no movement in the Middle East, unfortunately. There. So that also weighs, there's a lot of factors. And again, I don't think those things settle overnight either. And people who do, I think, are somewhat, I don't want to use the word foolish, but are a little naive maybe on it there. My other big takeaway that I was really disappointed with, if you were listening earlier, is the comments against Walmart from our White House and from the Secretary of Treasury. For-profit companies owe nothing to the United States to eat tariffs. They owe nothing to nobody. They owe to me, their stockholders. That's who they owe to. So that's a very important thing to keep in mind. And what worries me is that then you start to hear, because what it does is when you push CEOs into a corner, what do they tend to do? They fight back also. So now all the ones we're going to see this week, what does Home Depot say on their forward guidance? Are they nice or are they not nice? Are they, in that? And, these fights, these shots across the bow of industry, I just don't like them. I don't think it's the job of the president.
I don't like them either. I don't think it's the job of the president. However, the stockholders might be a little ruffled there, but remember who the people are in buying products. It's the people. And if a company is relying on foreign goods in this environment to be able to, sell, then, they've got to be adjusting their strategy. Second is you can't be recording massive profits and then suddenly saying, I'm going to raise prices as reflect. That doesn't go with the American public. So the bully pulpit that Trump has is a way of saying to them, hey, look, give us the 90 days. Give us the time frame to work out these negotiations, because if they raise prices, they're not lowering them if the agreements come.
Well, okay, then give me my rebate on the tariffs that I had to pay also then if I'm Walmart.
Yeah, I mean,
like he said he's going to do for the airline industry and for car industry.
This is a very difficult, subject. It is part of this new mindset, but, you can't be relying on cheap foreign products and running a business model looking forward. That's just not going to work anymore today. And I think this is a shot to Walmart to, wake up. But I think Walmart is this is a game of chess at a very high level, right? I mean, Walmart makes their comment, the president makes their comment, back and forth. The ultimate thing is bad comments to Walmart could wreck the populace that goes in there and buys products. So, ultimately, who's got the more of power of the bully pulpit? It's going to be the president. So
there's a yes and no to that. That didn't work with Jamie Dimon, did it? And those guys, they crashed the bond market. Their talk and their rhetoric crashed the bond market and forced our government to Liberation Day. I'll stand up and say that. Stand up and say that it was our financial market leaders. It wasn't our president that caused that. So that's that's where you and I sort of differ. I've seen the fact that this president people will speak back. Certain ones want to be on record. Unfortunately, for speaking back, and that's what scares the investors. We've seen these sky high moves. On great earnings reports by tech and stuff, but that gets weary is what I'm worried about this week. In other words, the first week when people say we're up 30% on our year over year and we did this, which is all the news that's fantastic, it gets a little bit less, important as we get further down the road, because the expectation is okay, your competitor already was up 30%. So if you're up 25, guess what? You didn't do as well, and that's what we might run into this week that I'm worried about too. That's why I think that downward, I'm with you. One trade deal gives us so much upward movement, especially if it's one that matters, like you're saying, the EU, India, good news in China, any good news out of the world in the state of war gives us such good upside potential. But what I'm afraid of is that retail spooked hands, are just going to capitulate again. And I'm more worried about them losing their money than what the market does.
I couldn't agree more with you, Howard, in this. And I'm not in favor of a president using the bully pulpit to pound corporates at all. But as a trader for well over 40 years, adapt and adjust immediately to the new conditions, to the new data points. And the new data points is this is a different government. This is a different economic policy. So we've got to adjust our trading styles. And back to your tweet analysis, you're right. You've got to be, if you're taking positions, you either do the Warren Buffett, be willing to take a 15% drawdown and not worry it, or don't be in the market. Or if you are in the market, as many of our viewers are, then you better be sitting there and watching the screens. That's
be nimble, right? Is what we're saying. Is we need to be nimble. We need to be more like currency traders than like stock pickers.
That's right.
That would be my takeaway from that for sure. And I couldn't agree more. That's exactly it. There's a lot of money to be made in a volatile market. I think the difference is all of us, including myself, who's been the contrarian in the group, thought that our momentum was more geared to one side than the other just a week ago. And I think we're back to a 50-50 on that. I think that's, for me, the wave that the boat was trying to turn, and it hit a wave right now. We got to see which way it's going to go from that wave.
Well, the boat was trying to turn. And a number of people peeked up and went, "Hey, is that boat turning?"
Yeah.
And they stopped.
No, yeah, they're like, and was that just it? Are they just saying, "Shh, no one saw us, no one saw us," or did something in the market spook it to where it is? The bonds are the thing that that I've been watching that have me the most concerned, because I know what they did just a month ago when they took off and no one was buying the treasuries. How is the, you seen anything in the Dixie or anything that's giving you any direction there, or what you think, is sort of there? And I'll bring the chart up for us here.
Yeah, well, I'm concerned. Obviously, we've been 5 straight weeks in a row with higher closes. Beautiful ascent off of the bottom, sideways trading. Now we've broken higher, but you throw back into the mix the tariffs, and everybody suddenly, it's an easy layup in the sense tariff. Everybody's getting out of the dollar, boom, back into the euro. And there you go with the dollar index dropping sharply around the 100.25 level now. We're below last week's close of 198. So this is back to that 50-50 risk, which we're talking about. The market would need good news now to get this dollar index to break back up, because the technical,
although it could quickly, like it did that other week. What I would point out is it's the first time that we've seen the body of the move below the low of the body last week. So that's more what I'll keep an eye on. If we can get and for those that don't know, on my chart here, if we can get this body to come back up here, it means it never closed a moment below where it was last week, before the low, below the lows where it closed last week on any given day. So that's what we want to see. I think personally, that's the structure difference. I think, like I said, when we're watching these 4 weeks before us, I think we were all in the same boat of, again, momentum. It's more to the upside. That's the path of least resistance. I think we're now, until we see it, unless we see a big move, like you're saying, above that 180 or so, then now we have bilateral movement just as quickly, right?
That's correct. And I think right now, only a break of 101, 101.20 is going to get the needle moving. But it's only Monday. And
I'm pointing that out because I made the mistake a couple of weeks ago. If you remember, I think it was on this huge wick that went up. We were having it bad. And on Wednesday, when we had met at our normal time, you were saying we need, it was down, and it looked down and out, and boom, it was one of the days that we got the good China news, and it was, back in a second. And
Right.
that's where, as
We're,
you said, money moves first. It
we're,
definitely does.
we're coming up on Memorial Day weekend. What does that mean besides, a period in which, we want to remember those that have, given so much. What it is a 3-day weekend. And with the Monday markets closed, you have risk from a Friday close until,
Yeah, an extra day of risk.
and in this environment, that is large. So,
Steve, that's a great point that I want to get ahead of. What I love about Quasar Markets is we try to get you ahead of the news.
yep,
That is the news. You got to be trading this week with a very mindful set that Friday you want to probably be 25% more neutral than you would normally be, because we've added actually 33% to the amount of time we're going to be off.
that's correct. And, when you begin to think about it that way, I would anticipate, let me just go out on it and here and say it. I anticipated a day down. I had a position in SQQQ this weekend on Friday's close. I thought it was a good weekend risk to hold that. So not a bad play. And I expect it to continue into Tuesday's trading. Wednesday would be the day I would probably look. But if any, acceleration to the downside move happens, it will happen Monday to Wednesday. And then Thursday, people will start saying, well, Friday, and what happens? Everybody says, I need to cover. I don't want to be short too much over the weekend. Remember, 50-50 risk right now.
Right.
So I'm going to start. So what's going to happen on Friday? Boom, you're going to end up with probably, if no news is out, you're going to end up naturally with an up day for the weekend.
Right,
So,
and that's also right for the bears and the algos to try to take it down. That's why I say there. I will be definitely a little more risk averse going into this weekend than most, because it's also on lighter volume. We tend to see it. Even though it's the end of the month, so we have expiring options that will matter on Friday. We'll see lower volume start on Wednesday. People like BigBeat are already on vacation. Those peasants like us will start thinking about that stuff on Friday.
Right. And, let's keep in mind, there's, some, again, I always watch for the positive. I try to balance out the positives and negatives. I know the negative was the downgrade and the tariff talk over the weekend. The positives, as I mentioned, the tax cut bill is moving forward. The EU trade minister's comment, also another one out there. Once we've done with this week, we're coming in to look at the new central bank meetings ahead. You got ECB on the 5th of June. And, you have one of the Belgian central bank coming out over the weekend in the Financial Times saying that interest rates will go slightly below 2% amid the risk to inflation, lower inflation, but lower growth. So now you've got ECB officials suddenly punching out. So how is the euro going to maintain this valuation? It's just impossible right now. So, that's looking forward and that's out. But anything can happen between here and there. And right now, the threat, the threat in the market, the negative in the market is the tariff talk. Suddenly, people coming out of last week, it's really not going that well. So, of course, that is the element of the degree of risk that has now put us into a 50-50 risk location here. So what goes down will come back up by end of week, or what goes up will come down by end. So that's the way
you're echoing what I feel so vindicated, because you're echoing what I said this morning, where I was looking at AI names that were beaten up today as maybe a mean reversion to the upside type play. I didn't see a lot. Nothing's really moving to the upside. It had been moving to the upside at that point. We're now starting to see some things for the mean reversion to the downside. But I think that's what you're really in right now. I think we're back to a lot of mean reversion trading here.
For the viewers, this was a major part of my career, was computer trading, and helping, some of the best quants in the world begin to develop foreign exchange algorithms, as I've been a manual trader my entire career. So that was part of, from 2005 onwards, I assisted with. So I understand a lot of the computer algorithms that are in the marketplace. And the simplest of them all really is a mean reversion model. It simply takes back and looks and says, hey, this thing just moved 1.5% in the last 2 hours. The last time it did that, I'm sorry, it's only done that twice. And every single time it peaked and dropped 1% again. Now, that's just a simple model that has no bearing on anything going on in the world.
Care less. It's not watching tweet analysis. It's not, and you know, that is such great information because, like you said, not only did you make that move from manual to algo, but you help train those algos and know what they're looking for and some of the trade styles that they like to use, and that is a big one, without a doubt. Is, you know, mean reversion. You and I have had many discussions on it. And I definitely think that is the way that I'm trading right now. And again, like I said, I'll miss, and you've talked about this before. You and I are similar in that I will miss the head, I'll miss the tails. Give me the body of the trade.
That's
you
right.
know, is let something start in a thing like this. Get in, have your risk reward set up based on that, and be ready to get out. And I'll give up a little bit. You know, if it moves 8%, give me 5 of that. That's all I need.
Right. So, you know, when we begin to lose information to drive trading, perhaps today, of course, we have a lot of information. But as we begin to move out into quieter markets, mean reversion algos take over and dominate trading. So you can be sitting there, and this is where that FOMO, fear of missing out type trading, is the worst, because you see something move and you're like, oh, I wanted to buy it at 3. Now it's at 4.5. I'll take it there. But a computer model says, oh, it just moved 1.5 points, and there's a 72% chance that it's going to drop 0.5 point. So the models automatically start selling. The next thing you know, boom, it happens. So, you know, this is what the environment of trading that we're in today. So if you want to get out in front of that, then, well, can you become a manual mean reversion model? I don't recommend that, because computers can operate now underneath of milliseconds and microseconds, and just simply us thinking and moving to a key to hit it is, you know, 1,000 milliseconds. So it's already 1 second. You're already well behind. By that time, somebody's already gone in and out. And I believe it or not, that's exactly what happened. I used to say that I get slapped on one side of the face, and before I could react, I've been slapped on the other side of the face in the marketplace. You know, as a market maker in foreign exchange, which was my role, and we were the number 1 in the world, and there's $7.5 trillion trades in a day. You know, there's important lessons to learn that can be applied into day-to-day type trading, and such things as, when you see a market move, you have to make an assumption that whatever it was, they know more than you.
Yeah.
That doesn't mean
Absolutely.
you go with it. It just means that you pause and watch.
Absolutely. Take time to look at it. I will say tick continues just to fly up, and we're hitting highs of the day across pretty much everything here. Qs broke through that 518 area I talked about. Now that 521 I mentioned is sort of the zone I'm looking at. 521.50 moved to the upside. SPY is only down a 0.25 percentage point now. Also, it has not taken off quite as much as Qs has. But again, you can see it approaching that 594.50 I targeted for us earlier here. So we are approaching those first high side targets here. So keep an eye on them as we approach them.
Perfect example of what we're talking. A perfect example of what we're talking about. Rational thoughts begin to come back to the market as people begin to say, yeah, but come on, that downgrade, that was so, you know, far behind the times. I mean, everybody else had already moved there. I mean, stop. So
yeah, I like I said, that one meant absolutely nothing to me whatsoever. Trade always is on my mind personally still now. But yeah, that Moody's downgrade doesn't matter. You know, I do want to watch the bond auctions this week to see what we do get there. What does interest rates do? They'll be important. I don't know if there's anything big this week. I didn't take a look at that.
Yeah, that's going to be very important. And again, you know, this week you have RBA, Reserve Bank of Australia, on Tuesday. They're expected to cut another 0.25%. Now they're in a successive cut mode, and that's going to be one I'll probably talk about on Wednesday. The Aussie the Aussie dollar because it may offer some great downside here if we begin to see this dollar index begin to turn. But they may be going to 3.85% now from 4.1. So that's another interesting thing. Another piece of the puzzle that came out over the weekend that I want to make sure, foreigners now own 32% of Tokyo listed stocks. Wow, that's a record. I've never ever expected to see something.
I said that yet last week to you. I told you that money had been flying in there. Might have been BigBeat. I'm sorry. I don't want. I'm not sure, but I said that, and I got poo-pooed that no, it's not a big deal. Money's not moving into Japan, and I was like, that's not what I'm reading. I don't know enough about it personally, but what I'm reading is it's all-time records. Yeah.
So what does that mean? It means that when things begin to happen in the world, and everybody, the computer goes, I need to balance, or new data comes in, the yen can become quite explosive now. So that's something to keep in mind. I do like the Japanese yen. From time to time, I can see the dollar correcting with it. But overall, if I were to say you want to stay outside the dollar, buy the yen against another currency, such as the euro or such as Aussie. We would call that, being short Aussie, long yen. And
I have the euro one up. You went Aussie on me. I don't have that one.
That's okay.
Give me 1 second.
Yeah, the
so
euro,
you want it with JPY first or AUD first?
That would be euro yen.
Euro yen. So, I have that one. That I have.
Or
I thought I don't have the Aussie dollar one.
That's okay. Then we'll look at the euro yen because it would be similar. Remember, 0.5% interest rate in Japan, and they are coming out again and reiterating that, if the conditions are met, meaning wages continue to go up and inflation continues to go up because they're fighting deflation,
right?
The conditions would be ripe for them to raise interest rates again. Wow. Who would have ever thought that you could say that the euro and the yen are converging on interest rates?
That's crazy.
Yen rates up, euro rates down. So this is a great chart. I'm looking at euro yen, where I would be looking to sell the euro and buy the yen on a longer term type basis. In fact, on a chart like that one right there, you can see the tops have been moving up. And, one of the ways to look at this, always look, are we making higher highs or lower lows? So in this case, you've been making higher highs, but now suddenly it's flubbed. Now, this move down, we want to watch, does it break the last low? And if it does, then that's something to begin to watch. Now, we have a little bit of a move up today because the euro is the number one traded currency pair in the world. Again, $7.5 trillion. So on tariff, you're out of the dollar. So the word tariff, they sell dollars. And if they sell dollars, the median to go to is the euro because it's the most liquid and the most depth. So if you've got $1 billion to suddenly sell, it's yours $1 billion in the dollar, and I'll buy the euro. So in other words, mine in euro dollar.
Right.
And then you begin to diversify out of the euro into your other currency pairs. That's the easiest and quickest of the trades. So you've got to move back up in euro yen, but I would be looking to fade the euro yen because I feel that the yen will maintain strength in the marketplace. And
much better than the euro is going to, for sure, right?
And stay away from the dollar trade. That's just one way. That's the great part of the three-dimensional type trading that foreign exchange offers you. You can buy euro and sell the dollar, right? Because it's a two-sided trade. And then you can say, well, I don't want to be short dollars in this environment, so I will buy dollars and sell the yen. Right. And now we have euro yen, a long euro, short yen. Well, wait a second. Australia doesn't look so good. So let me buy my yen back and sell the Aussie. And now I'm long euro and short Aussie. And this is the way that money moves in the world. And it kind of trades. And that's why interest rates are the tectonic plates underneath of the currency markets. And when they begin to diverge, money begins to simply snake its way through the market. But when I talk about that, we're on the scale, $7.5 trillion in one day, and that's easily going to be rising when the BIS issues its statement in the months ahead because they measured April, and the volatility in April was the highest we've seen in a long time. So
that'll be an interesting one to keep an eye on. I am curious. What's your estimate? What do you think it's going to be?
I'm going to say that we've probably at least eclipsed 8.2, 8.3. So, I mean, it's just phenomenal, those numbers. But this is why the thesis that I hold is money moves first, because the first thing people look to do, as you can see, is the tariff talk on Sunday talk shows. And bam, the euro dollar exploded on before markets were even opening.
Yeah, in a matter of seconds, like you said. So, that it helps you look. It's the same way that I use Bitcoin a lot. And I say what happens on the weekend, sometimes plays off into the week too, because these 24/7 markets that we lived in, when you were 24/5, but still, that those markets move first, like you said.
Yep. So it's some things to watch. One of the big ones will be the Eurozone and the UK probably on the midst of signing a trade agreement between themselves. And I would look for that to probably precede the United States, because we've got the UK already.
Right.
And probably once the UK and the Eurozone, watch for the Eurozone and the US. That would be a sneaky one for me if the Eurozone and the US,
and that'd be the impetus the market needs to get that next boost up for sure and break through some of those resistance zones.
Well, that's the largest marketplace, 435 million consumers in the Eurozone, 28 member nations. That would be a huge one. India would be another huge one. Of course, China and India would be, on par, I would think so.
Yeah, absolutely. Well, thank you so much, Mr. Flanagan, for joining us a little early here and helping us out. Appreciate it. Quasar Markets Live. You got the news here. Markets are moving up still. I do think we're gonna slide up the rest of the day. I think that there's going to be a bounce in the tech today. I think people are going to look at those valuations and say that drop didn't make sense. So everybody have a fantastic one, and we'll see you tomorrow morning.